Hello everyone, this is Paul from the PN Academy, and in this video I'm going to be looking at a method that you can use for both scalping and doing your intraday. And if you follow the rules from the start until the end without skipping anything, and you follow with proper attention, it could be able to give you 100+ pips. And the most interesting thing is you're not going to be able to suffer with adjusting settings of indicators, RSI, MACD, moving averages, crossovers, etc. We're not going to be doing that. We're going to be using pure price action. We're just going to be using a plain chart, a clean chart, right? So you're not going to be having that hassle of looking for indicators, searching for this name of indicator, etc., right? So without wasting time, let's just get into the video. But before we get there, if it's your first time coming across any of our videos, particularly this one, make sure you hit that subscribe button. Yes, that one down you're looking at, the red one. Make sure you hit it before you continue. Yes, that one, click it. Yes, now we can get into the video. Now, we're going to be, what are we going to be using into this video? We're going to be using market structure, like I've already mentioned. No indicators, no moving averages, no RSI, no MACDs, Bollinger Bands, strictly pure market structure. And part of market structure that we're going to be using, we're not going to be using trends, we're going to be looking at M's and W's, right? Just simply applying their rules. And the time frame that we're going to be using to identify the M's and W's is H1. Now, anything above H1, we're not interested in it. H4, we're not interested. Daily, we're not interested. Weekly, we're not interested. Monthly, we're not interested, right? And also, we're not going to be looking at the trend. Sometimes it's very difficult to identify a trend, to identify a high, to identify a low, and all that, right? So we're not interested in looking at that. We're just interested in doing what? We're interested in the following. Now, before we get into the things we're interested in, I would like us to first talk about the entry time frame that we're going to be using. The entry time frame we're going to be using is M15. So some people are very comfortable with M15, some people are comfortable with M5. But now what I'm going to suggest is you use M15 and then you can refine in M5. But if you're comfortable with M5, we're going to be using M5. If you're comfortable with M15, we're going to be using M15. We're going to look at both of the way you can use both of them, right? But how we're going to be using it is the structure is coming from H1, and then our entry is going to be M15. Then you can sometimes refine it in M5. That's how we're going to be using it. But some of you are very comfortable with particularly M5, but some of you are comfortable with particularly M15. So I'm going to be showing you how you can deal with both of them, right? So now let's look at the steps that you need to follow. Let me just clear this so that everything is clear. So what steps are you supposed to be following? One, when you open your chart, right, you're going to set what we call period separators. Period separators are when you open your chart and then you see those dotted lines, the vertical dotted lines, right? Now, for example, we said we are switching to H1. Now, when you switch to H1, it means that this is one day, right? We're going to do all this on the chart. Don't worry. We're still in the theory part. If it's your first time coming across the channel, we start with theory. We make you understand so that we go and backtest whatever we have spoken about in theory on the charts. You know, trading is practical, not theory, right? So the first step is you set the period separators, these ones here. And if you're in H1, this one means that each period here is one day. Then after that, of course, we have spoken about this. We switch to H1. We're only interested in H1, not any time frame above H1 to look for the structures, which is W's and M's. Then your only task after switching to H1, your only task is just to use your eye to spot out the M's and W's. Do not stress looking for a trend. I've already mentioned that. You just want to look out for M's and W's in each day. If it is this day here, or if it's this day, if it is today, for example, or yesterday or the other day, depending on the present day you're in, the day you want to take the trade. You're not interested in looking for the trend, whether it's trending downwards or upwards. Leave that. You're only interested in looking for the W's and M's. Why? It brings us to the last point here of the steps. We're going to be applying the rules of M's and W's. What rules are those? We have spoken about them extensively. Just look at the top right corner in the cards there. I've put the videos there, in case you didn't watch them. Now, what are the rules that we're going to apply of these M's and W's in case you didn't know? The rules are as follows. One, the neckline has to be broken for it to be a W. What do I mean by a neckline? If this is a W, meaning this middle part here must be broken. Now, how are we going to be trading these M's and W's? Since it is intraday or scalping, this distance here is very short. So we're not going to be trading these retests here. We're interested in the market coming back to the neckline and we can take the trade. The same applies for the M. if this is your aim, we're interested in this neckline being broken. So if it is broken and the market comes back here, this is when we're interested in this trade so that we can take a sell. So just for baby steps, an M, we're looking for sales when you see an M. Then a W, we're looking for buys. But first and foremost, we need the neckline to be broken. That's the first rule. The second rule is we need this week retest here. Remember, we're not trading this retest since it's intraday. If it was a swing, we'd trade both of them. Then they retest to the neckline and they push down. Or here, they retest to the neckline and they push up for the W when we're buying, right? But we're not going to be trading this retest to the neckline because it is a short distance since it is intraday. We're interested in the continuation, this continuation here, this continuation from the neckline up or this continuation from the neckline downwards, right? Then also you have to put in mind the different types of M's and W's. They're just the opposite of the other. For example, the first one we have is down, which is a double top, right? Then also in a W, we have the double bottom, just the opposite of this. The second type is we have this type of M with a lower high. Then also we have a type of W with a higher low. The third type, we have a type of M with a higher high. Then also here we have a type of W with a lower low. So these are the different types of M's and W's that we have. And your only work, let me just emphasize this, your only work is to observe these things on the chart. Do not look for a trend. Do not look for anything, right? Then after that, you drop down to the entry time frame, and then you look for a change of trend and take the trade. I'm going to be showing you how you take the trades, right? So let's just summarize these steps. The first step is go to your chart, you put the separators, right? After putting the separators, you go to H1. After H1, look for a W stroke M in H1. Then you switch to M15 stroke M5 for your entry. This one is for the entry, this time frame here. When the market reaches remember we're trading when the market reaches the neckline, or if it has retested the neckline with a weak retest. We need a weak retest to the neckline. Then for a W, we're looking for a buy. For an M, we're looking for a sell. Let me just repeat. Let me emphasize this because this is how you're going to be scalping or doing your intraday, right? Put the separators. It doesn't matter whether you're using TradingView or the MetaTrader, which most people use. We're going to look at both of them. Then switch to H1. Then after switching to H1, your only job is to use your eyes to identify the M's and W's that we have looked at. Then when you've identified the M or W, any type of them, I've given the 3 types, but if you want them in detail, the videos, they have attached it in the description and also in the cards in the top right corner. Then you want the market or the price to come back to the neckline of that W or M you have identified. And then after that, switch to M15 or M5 to see a weak retest. Then you can look for a change of trend and take the trade. Are we together? So if you've understood that, or if you've not understood, just slow down the video or you can rewatch it. But this is just the theory. Now let's go to the chart and apply these practically so that we can backtest it. We're going to take a period of, let's say, 5 trading days, right? We're going to start from October because I'm making this video in October. So we're going to start from the beginning of October until the current time we're in. Or we're going to take 1 week or 5 days. Let's see how we can backtest, right? So let's just go to the charts. Okay, so I'm going to start with TradingView. For those who use TradingView, for those who use MetaTrader, we're going to look at it later on, just in a short example. But it's just the same thing. If you're using a MetaTrader on your laptop, you just click Ctrl-Y to get the period separators. Remember, it's the first thing you're supposed to do when you get to the charts. So this is GBP AUD. Actually, let's not use GBP AUD. This is my personal setup that I want to follow up. Now, let me just choose CAD JPY. It's one of my favorite pairs that we can use. So we start by switching to H1, and then you create your period separators. I was saying that if you're using MetaTrader and you're using a laptop, just click Ctrl-Y on your laptop and the period separators will come. And if you're using a phone, just go to your settings and then you put this, you click the box, you check the box of the period separators. Now, if you're using TradingView, just like I am doing, what you're going to do is you're going to right click and then you go to settings and then you come and click the sessions. Check this box here, then you click OK. So you're going to see the period separators coming. Are you seeing these dotted vertical lines here? Mine is blue. They are bluish because the color I set. I don't know if everyone can see them. These blue dotted lines, the vertical ones. So since we're in H1, each period here, each distance between these two dotted lines symbolizes a day, right? So I would like us to just start from where October started from. Since we're in October, we're going to back test from October. Let's start from where October started here. So I'm just going to bring my replay tool and we apply all the tools. Remember, guys, the first rule you're supposed to do is put the period separators, right? After putting the period separators, make sure you're in H1. The first thing you're looking out for is a shape, either an M or a W. And then after that, you want it to get back to the neckline. After it retesting the neckline in a weak way, it has to be a weak retest. Then you go to the entry time frame, which is M15 and or M5. We're going to look at how we can use them here. So, for example, this is 3rd October here. So it's 30th. So we're going to start with October. Let me just play forward so that we can start October. So at October started, now we want to look for a W, guys, right? Just use your eyes to see a W. Remember, the rule of a W or an M is the neckline must be broken. This neckline must be broken. If it is an M, this neckline here must be broken. So we're going to backtest for at least 5 to 7 days, at least a full week, so that you can see exactly what I'm talking about. Remember, you don't need to suffer with identifying the trend, identifying anything. You just need your chart to be the way you're looking at the screen like this. So let's play and identify NAM or W. So in this case, this is the first time we're observing a W. Why is it a W? Because we do have this turning point here. In case you cannot see, you can clearly go to a line chart and you'll be able to see that we have a W here. The market came down, went up, came down, went up. So in this case, we do have this type of W here done with a lower low. So we need the market to come back to this neckline. When it comes back to the neckline, then we're going to observe how did it approach. Was it a weekly test? Then we go to our entry time frame and then we can take the buy. We're looking for a 1 to 3, risk to reward ratio of 1 to 3. I've already explained that, right? So let's just go back to the candlestick chart, right? So I'm just going to mark this area here like this. So let's play. Okay, the market has not yet come back. So this is the first time it came and touched this area here. Now, you cannot observe, if you've watched the video of break and retest, right? You cannot observe a weak or strong retest here unless you go to your entry time frame. Now, in this case, what is our entry time frame? It is M15. So I'm just going to switch to M15. Now, M15, how did this market approach here? It approached in a strong way. So it means I cannot see the trend. Are you seeing? I'm not able to observe this trend here, right? So what am I going to be able, what am I going to do? I'm going to switch again to M5 so that I'm able to see the trend, how it was coming. Now, are you seeing? At least now here we can see that the market moved impulsively low, high, low, high, low, right? So here at least we can be able to observe the trend. This is how you use either M15 or M5. If M15 is not showing you the trend, the mini trend, you have to switch to M5, right? If M15 is showing you, then you can use M15. Are we together? It is all about the trend. We want to see the weak trend. Now, in this case, we're going to take our trade when the market shifts away and starts making high. Here it was making lower low, lower high, lower low, lower high. Now, the moment the market switches away from that and starts making a high, it makes a high. So that's the point we're interested in. So we're going to take our trade from the current price, and then we want a 1 to 3, right? We're going to take a 1 to 3. Remember, I've advised you to use 1 to 3 so that you can be profitable over a long period of time, right? I'll explain that in detail in a different video, right? So we want a 1 to 3. I'll just set a 1 to 3 here. Okay, so after you setting your stop loss and take profit, please do not panic. Always leave your trades to play out until either a stop loss is hit or take profit is hit, right? And make sure you always backtest whatever I speak about until you're comfortable with them. Backtest them, practice them on demo account until you feel you're comfortable with it before you can apply it on your live account, right? Personally, we have tried out all these things on live account. We have traded them for months. We don't come and talk about what we have not tried, right? So let's play out this and see how it went. So this one hit, of course, it's intraday. It hit take profit very quickly, right? So we have our first winning trade. Now, after you winning this trade, since it is intraday or scalping, because it works for both, since it's intraday or scalping, you want to go back and look for another trade, right? So we shall go back to H1, right? You can clearly see the day is still on. The day has just started. This is like 1, 2, 3, 4, 5, 6 to 7 hours into the day. So most likely we can get another trade, right? So this W is done. Again, what are you looking for? You're again looking for the same process. You're repeating the same process. You're looking for either a W or an M. Are we together? So we would have the period separators. Now the next thing is to look for a W and M. Then we wait for a retest of the neckline. Then we can either take a buy or sell, right? In M15 or M5, depending on if it is showing you the trend. So now we are going to play, and then we identify an M, right? So here we don't have an M. Right? Let's see if the market creates an M or W for us. It didn't create it yet. So let's see. So here the market creates for us another W here. Someone may say, I'm not seeing a W. This is a W. You can just go to line chart and observe it. This is a W, the second type of W that we talked about with a higher low, right? So what do we want? We wanted the market to come back and test the neckline here, which the market already did. You can clearly see by that tail. But like I mentioned, you cannot be able to see this unless, let me just go back, unless you go back into the entry time frame and then you observe how it approached that area. So our entry time frame, the first one is M15. If M15 does not show us that the market came back, for example, the market gave us a mini W and retested it in M15, but now for us we want it to come back into this area again. So we have this higher high, higher low, higher high, higher low, then broke back. So we want it to come back and test this higher low here. Then we can be able to take our trade, right? So I'll just play. So you can clearly see the market came back here. So our entry is just going to be here, right? So I want a 1 to 3. My stop loss is, your stop loss should always be below structure. Are we together? Should always be protected. For example, here I have this area here that has a rejection, and also I have this neckline. So my stop loss being here, I'm protected. Or for me to be very safe, I want to be just here. So I've already gotten my stop loss. Now I want a take profit, which is 1, 2, 3. I'm going to set it to 1, 2, 3 there. So let's play. So this one also we hit our take profit. So this is the second trade that is hitting take profit, right? Now you repeat the same process. You do it over and over because it is a scalp or intraday. You can take as many trades as possible. Remember when I was starting, I said if you follow all the rules, it can give you up to 100 plus pips. By 100 plus, I don't mean exactly 100. I mean it can be more than 100 or close to 100 in a day. And those who have been trading for some time, you can bear with me witness. If you're making 100 pips every day, those are very many pips for someone who is scalping or doing intraday. So we so far have 2 trades already in one day, right? We're not talking about positions here. We're just talking about, we're looking at the risk to reward ratio of what I'm teaching you, the method of trading I'm teaching you to either do scalp or intraday. So we repeat the same process. We go back to H1. We already have the period separators. So what are we looking for again? We're again looking for an M or W, then we wait for a retest of the neckline. Just repeat the process like that. So again, let's play. We're looking for an M or W, right? Okay, so let me just reduce this. We're looking for an M or W. So this day ended, we had gotten only 2 trades, which is not bad. 2 trades, we could have had multiple positions or a few positions, depending on how you trade, right? We shall talk about that in future videos. So now here we have another M, right? Immediately, just when the day was starting, we have an M here. So what do we want? We want the market to come and test the neckline. The moment the market comes to the neckline, then we go to our entry time frame. Are we together? So now we shall shift to our M15 because we have tested. We shall shift to M15 and then we look for the trend. Now, if you look at this, there was no clear movement or trend, but let's see, want the market to break, if it can break back below this area here, then we shall be able to take the trade. But we don't have a clear trend here, so we shall shift to M5, right? Because now you can clearly see M5 at least gave us something. M5 gives you a higher high, higher low, higher high, higher low, right? So we want the market to break below this area here, then we can be able to take our sell. Since it is an M, remember we said M's are for sells, and then W's we are looking for buys, because the rule is saying after the neckline, retesting the neckline, so we look for a move up. After the neckline tested, we are looking for a move down for a sell here, right? So so let's see if the market breaks below, then we shall be able to take the trade. Okay. So this one, it attempted to close below, it didn't close below. Let's see. Let's see. If it closes below, we take the trade. Now the market has shifted away from this. So this one, if you're to observe, we don't have in a trade here. The market has failed to break below. So even if you go back to H1, you'll see that the structure is changing, right? You can clearly see now in this case, we're again above this neckline here. So meaning that, let's play and you'll be able to observe that the market actually, you'll observe that the market actually has changed structure here. So instead, you'll be seeing a different structure. Now, in this case, we are seeing a W, right? So I'm just going to go back slightly, and then here, we're here. So we're going to take a trade on this W here instead of the M, because the M did not give us the change of trend. Some of you call it change of character, right? So I'm just going to play. Okay, so we have this area here. So when the market comes back to test this neckline, this is the neckline. This is another W, the same type of W that we looked at, this W here. So we do want the market to come and test here, which it has already done. So I'm going to, so already we have tested here. So let me just go back slightly here, and we take our trade the moment it comes back here. Let's go to our entry time frame now, right? So we are going to switch to our M15. When we switch to our M15, we want the market to come back and retest, right? So the moment the market comes back to retest, that's when we're interested in. So it has rejected. We're going to take our long from here. And then we want this market here. We are going to take it at the current market price. So remember, we want a stop loss that is below where we are protected by this neckline and this tail here. So again, we're going to look for a descent, 1 to 3. That's not yet 1 to 3. Always take 1 to 3, but if you're good at 1 to 2, it's also fine. Though I usually recommend 1 to 3 because it will give you profitability over a long period of time, right? So even if you go in a long losing streak, which most of you don't consider, time is always going to come as a trader. You're going to go in a bad period, right? Whether you have a method that has been working for you for long, some of you call it strategy, even if it has been working for long, time is going to come and either fundamentals are hitting you out, something like that. At least there will be a reason for your method not to be accurate at a particular time. So let's see if we win also this trade. So we did lose this trade, right? Which is okay, which is very, very fine. It normally happens as a trader. So we do have 2 wins and 1 loss. Right, let's go back to H1. Let's go back to H1 and repeat the same process, right? Let's repeat the same process in H1. So we are going to look for a W. We're going to look for a W again. So in H1 here, we do have, when we hit stop loss, the market did create for us this M here, right? So what do we want? Since it is an M, we want the market to give us a retest to the neckline. And which neckline is it? This neckline here, right? So when the market comes here, we shall go and look for a trade in the lower time frame. The market didn't come back, right? So let's see if the market, so this is the first time the market comes back here into this area here. So we shall switch again to our M15, right, to our entry time frame, and then we look for the trade. So if you look at this M, let me just delete this. So if you look at this M15, it's not very clear, but if you want, you can use this. When the market breaks below here, then you can take your trade. But it will be best when you go to M5, as the rules suggest that if M15 is not giving you a proper trending market, then you switch to M5. So let's see if the market will give us a trade. Right? Let's see if the market will give us a trade. So the market is again trying to break above. Let's see. Okay, no change of trend yet. No change of trend yet. Okay, here, so someone may want to take a risky trade here, but I would still insist that you take your trade after it takes out this area here. Though someone who wants a risky trade can take it from up there, right? So let's see. Okay, so it's not giving us a trade. Let's try to go back to H1 and we see if really it is giving us a structure. So here the market kept going up. So we again identify a different structure, right? Let's look for a different structure. So on 4th, we had a losing trade. Now a new day has started, right? This new day has started, which is 5th. So let's try to look for a structure on 5th. On 4th, we had a losing trade. On 3rd, we had 2 winning trades. So meaning that you have 1%, you're 1% down on this loss and you're 6% up, meaning total net, you'll have plus 5% of your account up, right? So on 5th, let's try to identify a structure. Now on 5th, let me just delete this. On 5th, we see a market attempting to create for us a neckline here, right? So let's try to switch to our M15 and we see if the moment the market breaks below this neckline here, let me just also delete this, we are going to look for a trade. So let's see if the market gives us a trade there. Okay. Still, it bounced back up. Okay. We're going to be forced to go back to H1 because we're not yet breaking the neckline. So let's play and we see if we create a neckline. So again, the first 3 tests you would have would be here. The market created an M for you here in H1. So let's go to M15 and we see where we would get our trade from. Exactly here. Here. This would be our entry because the market gave us a retest into this area here. A weak retest, you can clearly see the momentum. So your first entry would be here, this neckline here. Of course, a decent 1 to 3. Your stop loss will just be above this structure here. You want strictly a 1 to 3, right? You have that first trade there already running. But also, we can see that when you go back to H1, you can see that the market is trying to create for you a second breakout here. So let's just play and see if it gives us that. You can see it gave you another, it's giving you another break and it even came back and retested it. So it seems we're going to have 2 trades on 5th, which is a very good advantage. This would have a losing trade the other side. So let's see if the market will give us a weak trend here. You can clearly see we had another trade here. So I'm going to take another trade. Let me just, I'm going to take another trade here because of this weak trade here. Of the weak momentum, sorry. It's going to be here. And then our stop loss is going to just be the same here. And we're still looking for a 1, 2. We're looking for a 1, 2, 3 still. Right? We're still looking for a 1, 2, 3. Just going to put the 1, 2, 3 here. This is a 1, 2, 3. So we are going to play and see if we hit stop loss or we hit take profit. So the first one has hit take profit. Let's see also if the second one will hit our take profit or stop loss, right? So the second one almost went back to hit our stop loss, but it didn't. So we still hold on and we see if we hit take profit or it. So we have 2 trades that have hit take profit. We do have this first one here, this first one and this second one. So on 5th, we compensated the loss that we had the other previous day, right? So you can clearly see that so far, these are how many days here? We have 1 day. Remember, I said the period separators stand for the. This is 1 day, the second day, the third day, right? This trade now, this was not scalp. The first one could have been a scalp, but this one was now intraday because it went a bit for until 60th, right? So now let's go back into H1 again. Now, when you go back to H1, actually, you may identify that you had even more trades because we do have a trade that gave us this and again retested this structure when it almost hit our stop loss here. It again broke back and retested this structure. So you could have had another trade here. So almost 3 trades, but it's okay. Now, you repeat the same procedure. Let's try to play again and we try to look for and we try to look for another trade. But just for the purpose of making the video short, we can stop here because we would have had another trade here and we missed it out, but it's fine. So that is how you can use pure price action without using any other whether moving averages or RSI or what are they called, MACD, Bollinger Bands, just using your eyes to apply the rules of M's and W's, and you can make over plus 100 pips every day as long as you see them. Now, we're just, of course, applying it on CAD JPY, but you can have your 2 to 3 pairs. Do not trade very many pairs, 2 to 3 pairs, and then just identify that. You can just try to backtest this, and then you see the risk to reward ratio that will come out. And out of, like, let's say 50 trades, you can backtest. Out of 50 trades, 100 trades, or 200 trades, or if you have time, even 500 trades, because we do take time. We backtest and trade these things for over 7 months on live accounts before even we bring them to you guys. So you can also try it on your side, at least give it, let's say, 100 trades minimally, because we've already tried it out. Then you can be able to do it on your demo and then later on your live account. So that was it for today's video. I hope you guys got value out of it. If you did, give us that thumbs up button so that more people come across it. And then also, if it was your first time, we do release such content every week. Make sure you subscribe and turn on the